All right, today we're going to unravel a real head-scratcher from the world of real estate tech. We're talking about Opendoor, a company whose recent performance is a total puzzle, with numbers that seem to tell two completely different stories at the same time.
So let's just get right into the thick of it. Picture this. A company announces it lost over $1 billion in 1 year. On top of that, its revenue is actually going down. You'd expect the stock to get hammered, right? But with Opendoor, it shot up 13%. So what in the world is going on?
Okay, let's break these numbers down. First, the really bad news. Opendoor posted a net loss of $1.1 billion for 2025. And to put that into perspective for you, that is nearly 10 times the loss they had the year before. I mean, that is just a staggering amount of money.
And yet, this is the paradox. Right after announcing that eye-watering loss, their stock jumped over 13% in after-hours trading. So what did investors see that made them so bullish? To understand that, you have to look at the massive shakeup that happened right before all these numbers came out.
The real story here actually starts with a period of pretty intense internal chaos in 2025. But it's that chaos that ultimately wiped the slate clean and paved the way for a totally new direction for the company.
So the first half of 2025 was, rocky. You had activist investors pushing hard for a change at the very top. By August, they got their wish. CEO Carrie Wheeler stepped down. A month later, in September, Kaz Nejatian takes over as the new CEO. And he moved fast, bringing in the former CEO of Coinbase, Lucas Matheson, as president in December. And just like that, you've got a brand new leadership team.
And this new team, they did not waste a single second. The new CEO, Kaz Nejatian, immediately came out with a brand new vision he calls Opendoor 2.0. It's a really clear three-part plan that's designed to fundamentally change how the company operates and, more importantly, how it makes money.
Now, understanding these three goals is absolutely crucial because this is what investors are betting on. First, hit break-even by the end of 2026. Second, get back to their bread and butter, aggressively buying more homes. And third, and this is where it gets really interesting, they're taking a totally different approach to cutting costs.
The way the CEO explains this third goal is fascinating. He says instead of just slashing budgets, they're focused on getting rid of what he calls organizational and tech debt. Think of it like paying off the principal on a credit card that you ran up for years with bad decisions, clunky software, inefficient processes. As Nejatian himself put it, the interest payments on these bad decisions were just killing us.
Okay, so that's the new playbook. But is it actually working? Let's check the scorecard. And this is where we get right back to that conflicting data that creates the whole paradox.
First up, the bad news. If you look at the entire year, the numbers still don't look great. Full-year revenue dropped from over $5 billion in 2024 to about $4.4 billion in 2025. That is a pretty significant hit. There's no way around it.
But if we zoom in, a completely different picture starts to emerge. This is where you see that buy more homes strategy really starting to work. In the final quarter of the year, right after the new CEO came in, Opendoor bought 46% more homes than they did in the third quarter. In fact, how fast they're buying homes has shot up 300% since September. Now that is momentum.
This little table really puts the entire puzzle in one spot. Yeah, that net loss ballooned, and they bought fewer homes over the whole year. But look closer. Their adjusted EBITDA loss, which is basically a key measure of how their core business is doing, it actually got smaller. And their cash on hand, it went up a lot. These are what you'd call the green shoots. This is the stuff that's getting investors excited.
So when you boil it all down, this isn't just about one or two good metrics. It's about the entire story the new leadership is selling. They're not hiding from the ugly numbers. They're owning them and making a very, very public promise about what's coming next.
And that leads us to this really powerful statement from the CEO on the earnings call. He essentially laid out his whole plan and told the market, judge us by these goals every single quarter. That kind of transparency and public accountability is exactly what investors want to hear in a turnaround story. They're not buying the past results, they're buying into this promise for the future. Which leaves us with the final question, right? Is this 13% stock jump a sign that Wall Street sees a genius turnaround in the making? Or is it just a risky bet on an ambitious plan from a new leadership team? Well, I guess we'll find out when the next earnings report drops. That'll be the next chapter in this billion-dollar paradox.